From You're Fired to I'm Selling, the Litinsky saga. Andy Litinsky, a name you might vaguely recall from the primordial ooze of reality TV, once stood before Donald Trump, nervously awaiting his fate on The Apprentice. He wasn't fired then, but fast forward a few years and he's essentially firing Trump media, dumping nearly $100 million worth of stock. It's the ultimate, you're fired. But this time, Litinsky's saying it with his wallet. Litinsky, along with another Apprentice alum, Wes Moss, co-founded Trump Media and Technology Group, the parent company of Truth Social. This was back in the heady days when the platform was touted as the conservative answer to Twitter. Now, Litinsky's dramatic exit paints a different picture, one of uncertainty and perhaps a touch of regret. This isn't just some disgruntled employee walking away. Litinsky was a key player, instrumental in the very creation of Truth Social. His departure is more like the architect abandoning his half-finished skyscraper, leaving everyone to wonder if it'll stand or crumble. It's a story as old as time, or at least as old as reality TV. Two guys team up with a larger-than-life personality, hoping to ride the wave of his fame and fortune. But somewhere along the way, things go south, and one of them decides to bail out, leaving the other to grapple with the wreckage. It's Shakespearean, really, if Shakespeare had written about social media and bad business deals. So, what exactly prompted Litinsky to ditch his shares? Well, the official story is shrouded in the mists of legalese, involving disputes and disagreements. But let's be honest, the writing's been on the wall for TMTG for a while now. The stock has been on a roller coaster ride, mostly downwards, and the company's future is about as clear as mud. Litinsky's $100 million sale is essentially him grabbing a parachute and jumping out of a plane that's rapidly losing altitude. It's a smart move, if a little ruthless. He's essentially saying, "See ya, suckers," to the remaining investors while he makes off with a hefty chunk of change. This isn't just about money though, it's about the optics. When a co-founder sells off almost all of his stock, it sends a pretty clear message. I don't believe in this company anymore. And that message reverberates through the market, spooking investors and sending the stock price even further south. It's like watching a slow-motion train wreck, except the train is made of stock certificates, and the wreck is happening in real time on the stock market. It's a morbidly fascinating spectacle, and we can't look away. Who knows what the final damage will be, but one thing's for sure. Litinsky won't be around to see it. Now let's talk about the legal drama. Apparently there's been some behind-the-scenes squabbling between Litinsky and TMTG, the details of which are as clear as a politician's promise. Lawsuits, accusations, and counter-accusations are flying around like confetti at a clown convention. It's a messy situation, and frankly, it's not all that surprising. When you mix big personalities, big money, and a struggling social media platform, you're bound to get some fireworks. It's like a reality TV show all over again. But this time, the stakes are even higher. The stock market, meanwhile, is having a field day with all this drama. TMTG's stock price has been more volatile than a teenager's mood swings, plummeting to record lows in recent weeks. It's a roller coaster ride that even the most thrill-seeking investors would probably want to avoid. It's a chaotic scene, and it's hard to say where it'll all end up. Will TMTG survive this turmoil? Will Truth Social become the conservative haven it was meant to be? Or will it all just fizzle out like a damp squib? Only time will tell. But one thing's for certain, it's going to be a wild ride. The relationship between Donald Trump and Andy Litinsky is a fascinating study in contrasts. Trump, the brash, outspoken mogul, and Litinsky, the more reserved, behind-the-scenes operator. They seemed like an unlikely pair, but for a while it worked. They were the odd couple of the social media world. But as the saying goes, all good things must come to an end. And in this case, the end came with a bang, or rather a $100 million stock sale. It's the ultimate breakup, played out on the public stage for all the world to see. It's tempting to see this as a betrayal, a sign that Litinsky has lost faith in Trump's vision. But perhaps it's simply a case of a savvy businessman recognizing a sinking ship and jumping overboard before it's too late. Whatever the reason, the bromance is officially over. And while Trump may put on a brave face, it's hard to imagine he's not feeling the sting of this very public rejection. It's a reminder that even in the world of business, loyalty can be a fleeting commodity. So what does all this mean for the future of Truth Social? Well, it's not looking good. With a co-founder jumping ship and the stock price in freefall, the platform's prospects are about as bright as a burnout light bulb. It's hard to imagine Truth Social thriving in this environment. The platform has already struggled to gain traction. and Litinsky's departure is likely to further erode investor confidence. It's a vicious cycle, and it's hard to see how Truth Social can break free. Will it survive? It's possible, but unlikely. The odds are stacked against it, and it would take a miracle to turn things around. It's a sad ending to what was once a promising venture. But in the cutthroat world of social media, only the fittest survive. And right now, Truth Social looks like it's about to be swallowed by the waves. It's a cautionary tale about the perils of investing in a personality cult, and a reminder that even the best laid plans can go horribly wrong.